joining me now. David Owen, Chief European Financial Economist at Jefferies International. Hi, good morning.
Morning.
I mean, a blockbuster number. You can't fault it, can you?
No, you can't. And in particular as well, it's spread through to domestic demand and also consumption. And we really need to see Germany doing incredibly well over the next year or so and drag the rest of the Eurosystem up with it. So it's an encouraging figure. It's only, though, 30% of the Eurozone, and the rest of it is still struggling.
Is it as good as it gets for Germany? I mean, as Philip was saying there, looking ahead, there are headwinds, not just for Germany, but for the global economy.
No, absolutely. And the export cycle is probably now going to sort of turn over to some degree. Not that exports are going to decline, just that we're going to see a slowdown in exports from Germany. So the key thing now is domestic demand, particularly consumption, continues going in Germany. But the struggle for the Eurosystem is still very much there. And I'd argue if the euro actually strengthens on the back of this isn't going to be very good news for other countries.
It is inching up.
Yeah.
We've come a long way, haven't we, from 118.77 in the early June period to around 130. I mean, how much higher would we have to go before authorities, especially policymakers, get nervous about the level?
Well, I think at this level it's a major problem. I think we need a much weaker euro, down towards parity, if not below, in order to stimulate demand more generally across the region. As I say, Germany's only 30% of the system. You've got the other 70% still struggling. The figure later today will probably show Eurozone GDP doing OK, but up a less impressive 0.9%.
But you're thinking, and we could have a contraction in Eurozone growth come the end of the year, possibly in the fourth quarter?
Absolutely, absolutely. I mean, the headwinds still facing the system are immense. And I think the other thing to highlight, maybe not so in the German data, but certainly for the Eurozone overall, a lot of the growth is driven by the inventory cycle. And that, by its very nature, tends to be very temporary. And that will unwind as we go through in the second half of this year.
Spain and France later, David. Spain 7.45. France 7.45.
Yep.
Spain at 8. 0.5 for France. 0.3 for Spain. Is that pretty much in line with your estimates?
I think so. Maybe Spain a little bit weaker at 0.2. Maybe France a little bit weaker on the back of those weaker than expected industrial production figures at 0.4. And that would leave the Eurozone probably coming in at about 0.9. These are good figures overall, but it's still not the end of the problem.
Many are saying with France, we still need more news on their retrenchment, and consumer spending's quite tepid before retrenchment. So that's an area of concern, isn't it?
Absolutely. I mean, the budget deficit in France is still very high, still approaching 10% of GDP. And, France does have imbalances. I mean, the thing about Germany is that it's got the firepower to actually spend, whereas in France, I think the recovery by nature will be much more tepid.
And Spain, well, we know the story there. Unemployment, 20%. Big structural issues there. Are they making just slow inroads into the structural issues that need to be addressed?
Absolutely. I mean, one thing about the crisis is forcing governments to address things like labour markets and product markets, and also major reforms to pensions. The issue with all these reforms, though, is they take years to come through. I mean, things like structural reforms to labour markets, we don't see the benefits maybe for 5, 7, 9 years down the line.
It's a long time.
It's a long time.
Thanks so much for joining us, David, there from Jefferies International. Now.